Now, almost all consumer companies have reported double-digit volume growth in the fourth quarter. It's not unfortunately reflected on Essel Propack numbers. The toothpaste tube manufacturer, well, I actually call it the packaging leader of the world, reported just about single-digit revenue growth in the fourth quarter. Higher raw material prices, maybe expansion expenses weighed in on the bottom line as well. Joining us in our studios now to talk about the quarter and the outlook ahead is Ashok Goel, the Chairman and Managing Director of Essel Propack. Good having you, Mr. Goel. Thanks so much for taking the time out. As I read a brokerage note, they say that quarter was hit, weak quarter, but the growth is expected to recover. Is that how you would sum up quarter 4 and FY18 and the outlook for FY19?
Outlook for FY18-19 is even actually better than Q4.
Yeah, because Q4 was slightly weak.
Q4 was slightly weak, primarily because we had a little, what you call, not so expected good show in Europe. Europe was a dampener, which is why that pulled the whole global numbers. But as we are currently seeing, we are seeing an uptick in demand across the world. US is currently doing very good, so is Colombia, Mexico. Germany is firing. So we are seeing a good demand across the world. If we talk about different geographies, we can talk about that.
Yeah, sure. I would want to talk about that. The dichotomy in the commentary, and again, I don't know if it's got to do with the nature of the business, Mr. Goel. Yesterday, we were speaking to MS Unikrishnan of Thermax, who said that the Europe today is way different than the Europe 3 years ago because he's seeing some fabulous demand from across the European continents, continental Europe and otherwise. You were saying that Europe was weak for you. Is it because of the nature of the industry, or is it a one-off that happened and might improve in FY19?
It was one-off unique to Essel Propack because our team did not have a right understanding in terms of timeline that they will have the new pipeline of business getting commercialized, and that's the only hitch. Otherwise, technically, market-wise, in every other respect, Europe was not bad.
Okay.
It's just that our team misjudged the timing of the new business pipeline to materialize.
That's being very candid. So do you think FY19 will then therefore show an improvement? Have you guys been able to now factor in what will work for the timelines?
Yes, of course. FY19 would be far superior than what the previous year was as far as Europe is concerned. US, we are doing much better than we expected ourselves. So is Colombia, so is Mexico. Egypt is growing nicely. India, we expect a good growth going forward, because now is the time when things are settling, when the projection for the monsoon is good. We expect the demand to kind of uptick, and we are seeing that new product launches are already happening. India, this year we will have a focus on pharmaceutical mainly. We will grow significantly in pharma. We have a new plant in the northeast, that is Assam, that is going to be commissioned in July this year. So part of the business will shift from rest of India, and part of the business will get new from the customers within northeast of India. So that should also give a good boost. Russia, we are now going to open a new factory, shutting down the old and shifting the new. So a lot of happenings are, a lot of projects are on the pipeline.
I'm not hearing a word of caution from you on any of the geographies. I haven't heard about China though as yet, but I'm not hearing a word of caution on any of the geographies that you are present in.
Yeah.
That would mean that FY19 could be significantly better than what you've done in FY18 on the volumes front, at least, if not pricing.
No, I think when we talk in volume, in revenue terms.
Okay.
So revenue, I have no doubt that we should grow about 15% globally, global average. Some geography, most of the geography are firing. China, our focus is non-oral care because we are present in oral care by and large. So non-oral care is a focus, which the team is putting a good effort there as well.
Oh, and you believe consolidated non-oral care can clock in 15-20% for FY19 and for the years ahead, or you believe that's being conservative?
So 14-15% over the base of current 40%, for sure.
Okay.
For sure.
And that would last for a few years, because you in a manner of speaking, you are starting off in a meaningful way in non-oral care only over the last 2 or 3 years.
Exactly.
So with the base being a benefit as well, do you believe multi-year 15-odd%, 20-odd% growth trajectory is possible in non-oral care?
Yes, absolutely.
So what's the 5-year vision, Mr. Goel? Where does oral care versus non-oral care last? 2, what does that do to your overall CAGR growth, say over 5 years? Because I believe as management, you're not looking at just FY19 or FY20, you're making 5-year plans. And would you be able to clock in the growth that you're clocking in with an improvement in margins, in return ratios, etc. over 5 years? Is that a distinct possibility?
Yeah, see, Neeraj, the moment we talk about non-oral care, the improved margin, the improved return on capital employed is embedded in our mission of having non-oral care to grow faster.
Okay.
And therefore, so because it is embedded, so it is understood that all your return ratios will improve. More you do non-oral care. Just one example, I'll give you one multinational company. Of course, I can't name them. It's a non-oral care as well as non-oral care. Non-oral care, most of their hair care category, they are launching globally from the current format of bottles to tubes.
Okay.
And we are the preferred partner across the globe launch. That itself shows an indication that the category will grow. I mean the business will grow as far as we are concerned, irrespective whether the category grows, irrespective whether the economic environment of a particular country will grow or not. So that's the beauty of our strategy to go non-oral care.
Okay. It sums up what Essel Propack will do. I reckon you don't have any immediate fundraising plans for any of the expansion plans that you may have. No. It's all sorted.
No, in fact, we have been reducing our debt.
Yeah.
We have reduced
I've seen that, yes.
Yeah, so we constantly keep on reducing our debt, and that's the direction we will move. Except this year we have quite a few capex which we qualify as strategic investments. Like Assam is one, and then we are building a new capacity on our lamination. So barring those, I think there's no need for us to raise cash. There is enough headway for us to leverage our balance sheet.
Interesting. One last question, and more from a consumer sector perspective. The last 12 months, how has, I don't need you to name individual clients of yours, but how is the performance of some of the Indian FMCG majors? You are a direct pulse owner of what's happening across.
Lead indicator.
Yeah, lead indicator of sorts. We're seeing, for example, Colgate volumes didn't grow as well in the toothpaste segment versus maybe the Patanjalis and the Daburs did that well. I mean, how is the market moving in the categories that you are present in, without getting into the names of any of your clients and how well they are doing? If you can give us some color there.
Well, there have been some portfolio churns, and that happened whether there was a challenger like Patanjali in a country like ours, or in other country, if a brand has been aggressive in new launches, aggressive in new advertisements, more advertisements. So that portfolio shift does keep happening. So therefore, India has not been unique in that sense.
Okay, I won't press you for more. I can appreciate that you need to keep some of the things within yourself. But thank you so much for taking the time, Mr. Goel, and talking to us. And all the best with the confidence as well.